Hi guys, welcome back to my channel. If you're new here, thank you for joining. Thank you for clicking on this video. If you're a returning subscriber, thank you for always coming back. So in today's video, just like I had promised at the beginning of the year, I'm going to be sharing some tips for generally about living in Canada. And today I have someone here with me to deal with a very important matter. Yes, anything that has to do with money is very important as far as I'm concerned. So today we'll be discussing the credit card system in Canada. Guys, this is going to be a handful. Trust me, you do not know as much as you think you know about credit card system in Canada. So it's going to be trashing all of the issues that has to do with credit card system. And I'm just going to bring in him now. And let's show him all the love, okay? Don't forget to like this video. That is very important. Share with friends who you know will benefit from this. Subscribe if you're here to turn on your post notifications and all of the good stuffs, okay? So let's invite our host now. Sorry, our guest. So you're welcome to the Kemi-ing way. My name is Kemi. You already know that. I'll just allow you to introduce yourself, okay?
Okay, thank you, Kemi. My name is Samson Omotosho. I
Okay.
am a professional accountant. I,
Yeah.
I work as a professional accountant and investment analyst, and I also a tax specialist in Canada.
Yes. Yes. Thank you so much. Thank you so much for joining us here. So today, like I said, we are trashing the credit card system in Canada. Yes, we are trashing it. We are breaking it into pieces because even for me, in fact, the only thing I know about credit card system in Canada is having a credit card and paying my credit card balance. Okay, so the purpose of this video, like I've explained, is just to give people like an overview of what it means to have a credit card in Canada. Try to explain the system, how it works, credit card balance repayments, the good part of it, the bad parts, what it means to owe or not to pay back, everything that has to do with credit cards. So the first thing I want to ask, or the first question I would like to ask is why credit card? So when we came into Canada and went to open an account, we were told we had to get a credit card. And I was like, normally I like to spend what I have. And then they said you just had to get a credit card. So my question is, why credit card? Why do we, especially for newcomers, why do they need to get a credit card? And what benefits does it offer to them?
Right, thanks, Kemi. Very good question, especially for someone who is just coming into Canada for the first time. You need to know you go to a bank and the bank is asking you to get a credit card, and you're wondering, why do I need a credit card? So the first thing to note is that a credit card a credit card would give access to um, short-term finance from the bank. So
Okay.
you need cash to buy groceries before you get your income or pay by the end of the month, or by monthly. You want some funds to be able to access or to get some activities done. So the
Yeah.
credit card will give you an opportunity to access finances, short-term finance from the bank whenever you need it. So
Yeah.
when you approach a bank, the bank is going to issue you a credit card, and there's usually an initial limit on the card, maybe a $500 or a $1,000. So that gives you access to instant credit.
Yeah.
Another
Okay.
another reason why you would need to get a credit card is the environment needs to get your credit history. You need to
Okay.
begin to build a history of your credit, and that
Mm.
would come handy and would also help you when you want to assess bigger financial credit in the future.
Yeah.
There has to be an history to be able to assess how well you've been paying on your credit,
Mm.
how bad you've been paying on your credit. So the
Okay.
credit card gives financial institution or institutions opportunity to be able to assess your credit history.
Mm. Oh, I get it. So that's why you just have to get it. Well, I guess in that case, so what's the someone who decides not to get it? That means the person doesn't want to assess anything or doesn't want to have like a record. Is that it? Like, say, let's say
Well,
someone says, no, I don't want it, no matter the case, then what happens?
so you probably be putting yourself in a very tough situation, and also the institutions in a tough situation, because
Mm,
one of the things that the credit card does is to help institution review your credit history. Also, through your credit history will give you a credit score that
oh,
would
yeah.
that would determine how credit worthiness you are, how credit worthy. It determines your
Mm,
credit worthiness, how credit worthy you are. So
mm,
if you say that you don't want a credit card, yeah, it's possible, but at the point that you will need to assess
mm,
credits, maybe
yeah,
you want to get a mortgage, you want to buy a house, you want to
yeah,
finance your car. There is no
yeah.
credit history. Then
I
the institution now has the option of either to advance you the credit, or
mm,
to advance or not to, or if
mm.
they will probably be advancing the credit at a very high interest rate.
I see. I see. Okay, I understand that now. So that has brought us into the next question I want to ask, which is credit score. Every time credit score, what's your credit score? Credit score. I know there's a low one, there's a high one. Just talk about credit scores. So what is credit score?
Yeah, that's a very good question and quite important to also understand. So your credit score, before I talk about the credit score, I would want to talk about the credit report.
Okay.
So the credit report comes first, then before the credit score. The
Okay.
credit report is by the time you get your credit card, you begin to build a credit history. So the credit history goes to some form of financial um, company that puts together all your credit information, how
Mm,
much you've paid on your credit, how well and how timely you've been paying down.
mm.
Um, that is brought into a report,
Oh
and
yeah.
that is your credit report. So
Okay.
in the credit report, from the credit report, you now determine the credit score
Mm,
based on the credit report. So
mm.
now the credit score is a three-digit number,
Yeah.
and it ranges between 300 to 850.
Wow.
So the 300 being the lowest, 850 being the highest.
Yes. Okay.
If you've been paying down well on your credit card, or the credit balances you've been paying them at the time you're supposed to pay, then you will
Mm,
have a very good credit score, which will be close to 850. But if you have been defaulting on the credit,
yeah.
you'll probably be down, you'll be close to 300.
Wow.
Now, a good credit score would start from 671. If you
Mm,
want to assess significant credit in the future, maybe you want to buy a house, you need a mortgage, you want to finance a car,
mm.
whatever kind of credit or loan that you might need in the future. If you have
Yeah.
a credit score of about 671 and above, yeah, it's assumed to be good. But the
Okay.
best or the excellent credit score that you want to be looking at is anything above 800.
Wow. Okay. All right. I get that now. So we have the very high one, which is one that gives you that shows that you're credit worthy, right? And then people like, oh, come and borrow money from us. Come and take a loan from us, right? Okay, I get that now. That also brings me to still speaking of credit score. The first question I want to ask about that is that, usually maybe you want to buy a car, like you said, you want to finance a car, you want to buy a house, they want to check your credit score and they do something called, please correct me if I'm wrong, pulling, right? They want to credit, is it called credit pulling? So now I have heard, we we just, people say a lot of things, right? And I've heard that when they do that or when they check, it has an impact on your credit score. I just want you to clear out that part of it.
Okay, so when an institution wants to assess your credit score or credit history,
Mm-hmm.
is usually known as credit check.
Credit check,
So
okay?
yeah, credit check. Yeah. So another way to say it is the credit pooling that you talk about, which is a common
Yeah,
term that is being used by everybody around.
yeah,
Yeah. So as often as your credit as often as the institution needs to check your credit history, check your credit report or score,
yeah,
they pull the information
yeah,
from the financial system database.
yeah,
Um, a lot of time that may have some form of little impact on your credit score, because as often as people assess your credit, it means that you are trying to assess credit and people are just worried about if you have a good credit score or not, but it
yeah.
doesn't have any significant impact. What most
Okay.
financial banks have done right now is there is usually on the online banking platform, there is
Yeah,
usually a link where you can get check your credit score by yourself,
yeah.
and it's not going to really impact your credit history or your credit profile.
Yes. So I also recently I found that out that I could actually go into my bank app, check my credit score. I didn't even, so I just wanted to be sure that it has no implication. I can check it as much as often as I want, and it has no implication at all on my credit score. So now let's talk about the impact or the disadvantages of having, you've given us the range now. For the high one, what is the disadvantage? For the low one, what is the the advantage and disadvantages? And also, what are you supposed to do to give you like a very high or the very best credit score that you can have?
Okay, very good question. So the high credit score does not have a disadvantage.
Okay.
It only has advantages. So
Okay.
what it means is that if you have a high credit score, especially between 800 to 850, which is determined to be excellent, then
Mm,
most financial institution would be comfortable to advance um, financial or credit facility to you. So
yeah.
you may be able to have opportunity to access most of this credit from any financial institution if you
Mm-hmm.
have a credit score of about 800 to 850. So
Yeah.
it's all beneficial. There's no disadvantage to having a very good credit score. It
Credit
also,
score.
in some instances, it can also improve the interest rate that the loan
Mm,
will be advanced to you on.
no.
If you have a very good credit score, it means that your default probability, the probability that you might default on the loan, it's very low. So interest rate that would be attached to that loan might also
Mm,
be a bit lower than someone whose credit score is poor,
very low. I see.
right?
Okay.
So if you have a low credit score, um, let's say maybe between 500 and 670,
Mm,
um, yeah, that's okay. So let's say between 671 and 800. That's not a bad one. It's tend to be good, but at the
okay.
same time, it's not as good as 800 to 850. So
Oh,
the implication of that is if the financial institution wants to advance credit to you, they will probably be worried about um,
mm,
your credit worthiness, and that may
okay.
also affect your interest rate. The,
Okay.
the one that has a negative impact is the poor credit score. No
Mm,
organization, no institution would really want to do business, especially that has to do with credit, with someone who doesn't have a very good
Mm,
credit history. It means that you've been defaulting on your loans, you've not been paying well, you've not been paying on in a good time, and it's going to create problem to the institution.
I get that. Thank you so much for giving us that very, sound explanation. At least I'm also getting something, and I'm sure everyone is going to benefit from this. So the next one I want to talk about is now the balance repayment. Sorry, the credit card balance repayment. So usually, even for me, I see that when you get a credit card, they have a part where they just give you a minimum balance, and then so does it mean that, so I just want you to explain the credit card balance repayment. Do you have to pay just the minimum balance, or you have to pay everything that is under? So let's just talk about credit card balance repayment. What's the golden rule? What is the best way to, you know, repay your credit card balance? And also,
Very
okay, in addition, sorry, in addition to the question, so we just take everything at once. At what point do you begin to accrue interest on credit card? And is it safe, like I said, is it safe to just pay the minimum balance? What's the best practice generally?
Thank you. That's a very good question, and this is the trap that the credit card has.
Yeah, I can
Um,
imagine.
so the first thing is a lot of people don't know that there's interest being paid on the credit. Some people don't even know the interest rate itself. You may have to get in touch with your bank, but in general, I know the interest rate on credit card is between 19% and I think 21 or 20 something percent, depending on the
Mm,
bank. So
okay,
interest rates on credit cards are that high, that significant. Now, at the point of initiation of the credit card,
yeah.
the bank gives you a 21 day of grace that
Mm,
within these 21 days, if you assess the credit and you pay back these funds, there will not be any interest whatsoever on the funds that you have assessed.
okay,
So if you let's say for example you took a 500, you access a 500 credit from your credit card on the
okay.
first day of the month, and on day 20 you are able to pay down the $500, you
Mm,
would not be charged any interest on that amount
wow,
now. So
getting it.
but coming forward on your on your credit card statement or credit card app or platform, you probably see a minimum balance, you see a statement balance. So what that is saying is that the minimum amount that you need to pay on that account is the minimum balance. So
Okay.
within the 21 days, if you pay the
Mhm.
minimum balance, that is okay. It doesn't mean that you will not be charged interest. So,
Wow,
so if you pay the minimum balance, you will be charged interest on the outstanding balance. Take for
wow.
example, if you have a minimum balance of a $10 and you have
Mm,
drawn $500 from
mm,
your credit card, on day 20 or day 21, you pay the minimum balance of $10. You would
mm.
be paid, you would be charged interest on the
Interest.
490 that is left.
These people are not
So
nice.
that is when you begin to pay the either the 19 to 21% from your bank. Right.
Ah,
Now, if you are able to pay the statement balance, which is the amount that you have which is the amount that you have used for the period of that 21 days, you would not be charged interest on
wow.
the account.
Wow. So people should
So
not, guys, this is deep though.
I usually I usually try to advise people to pay attention to the credit card cycle and make sure that they pay down on the account within 21 days.
Oh.
because as you
Ah,
also pay, it also improve your it improves your credit history, improves your credit score and your credit
mm,
rate. Yeah, credit score. So by the time financial institution begin to um, run your credit check, any maybe organization, if you want to rent an apartment, they could
mm,
also want to check your kind of credit history to know how
yeah.
good of a tenant you can be. So all of
Mm.
those accumulate to determine your credit score.
Oh, I get it. So that means the best thing is just to you spend, you replace. You use it, you replace. Because even for me, I check my, my app, my bank app, and then it says this is just out of maybe I've spent 200 let's say I've spent $200 and it just tells me I have a minimum balance of $10. And then I think, okay, so that means I can just pay the $10 and then I carry it over, not knowing that there's actually an interest on the balance I'm not paying, on the remaining money I've spent that I'm not putting back. I think now I get it. So, from what you have said, what it means is that the best practice is for you to spend and replace, right? If I'm getting you
Yes,
correctly.
you're correct. You are correct. The best practice is to spend and replace.
Oh,
Two things that would do to you, it's going to improve your credit score. You're going to
wow.
have an excellent credit score. Then it's going to reduce the interest that you are supposed to be you should pay. So you probably not pay interest um,
Wow.
on your account. However,
Wow.
if it's not the end of the world, if you're not able to meet up with uh, your financial obligations by the end of this month, it's just important to pay close attention to your credit balances and your credit card, and ensure that you pay as soon as possible to
As soon
improve your
as
credit score.
wow.
Yeah, and to reduce your interest.
I get that. Thank you so much for clearing that out. So, also speaking of credit card, I want to ask what is the biggest mistake, like the greatest mistake anyone can ever make when it comes to managing their credit card or making use of their credit card? Is there, I know there are some people that they say they live from credit card to credit card and they just collect this one, max it out, collect this one, max it out, collect this one, and then, so what's like I know that's one, but what are the other biggest mistakes? Maybe some that you've heard, some that you're aware of that people can make that can actually be very detrimental to their whole financial stay here in Canada.
I mean, the credit card is is a very interesting and wonderful system. It gives you
Mm,
very good access to finance as when you need them. You are able to, walk into a store, swipe your card. You're not worrying
mhm,
about where the money is coming from. But one very deep pitfall is when you spend and you're not keeping tab of paying back
mm,
the on your card, the balances on your card, and you begin to
mm,
accumulate the balances. It's really a big hole. And as you accumulate, your interest begin to continue to grow, the
mm.
balance continue to grow, the interest continue to grow. Don't forget that month on month you have obligations that you need to meet up with. So if you're
Yeah.
not paying attention to expenses, you are not paying down your balances as and when due, you begin to accumulate the balance, you begin to accumulate the interest, and it begin to get more difficult for you to be able to pay.
Today
So
will be.
that's a major pit hole that a lot of people fall into. It's very easy
Mm,
to assess, but if you accumulate it, it's very difficult to pay back. We need
mm,
to pay so attention to that.
yeah. Thank you so much. You have really trashed like majority of the questions that I have. There's one I'm still not clear on. I would like us to trash also, which is the credit card cycle. So I'm going to use mine as an example. I know for mine is I think is it the same? Does it the cycle doesn't it's not the same for everyone, right? Just to be sure. right?
The cycle, this is a 21-day cycle, but the
Okay,
timing might be different for
okay.
depending on the bank and all of those. Yeah.
So this is my question. So for me, I'm going to use mine as an example. My when I check my bank app, it says that my, for example, now one of my credit cards says my repayment due date is February 30th. There's no 30 in February. Say, okay, let me go back to, let's say March 30th. So it says March 30th, right? So that means that I have to pay first. This is my first question. I need to pay the money before 30th of March, and then I can spend through and then pay the next one before 30th of April, right? But for me, I think that's more than 21 days, isn't it? I just need to be clear because really my repayment date is on the 30th of each month. I don't know what's going to happen now that February is not 30 days. But then I just want to confirm. So, how does, because I know that's more than 21 days. I'm just also trying, I'm asking this for
So
myself.
so your repayment date is maybe 30th of every
Yes,
month. So that
yes.
means that, if you count that back, your 21 days will not be from the beginning of the month. Is your cycle that is ending by the 30th of that month. So, and that is the time that you need to pay down on the state. So when you look at your statement, you're going to be seeing minimum balance.
Yes.
You are going to be seeing statement balance.
Mm-hmm.
So the
Yes.
minimum balance is usually very small. That is the amount that at least you must pay on the due date on your
Okay.
account, right?
Mm-hmm.
So, but with that amount, you will still pay interest on the balance outstanding. But
Mm-hmm.
if you pay the statement balance on the due date, it means that
Mm-hmm.
for the period of the credit cycle, that is the amount that you have spent within their credit cycle. That amount,
Okay.
if you are able to pay that amount, then there would not be any interest charged to your account as
I
regards
see.
that. And I think
Mm.
there's also a third amount, which will be the balance on your credit card. The balance on your
Yes.
credit card, the balance on your credit card includes the amount. Let's say your billing cycle, your 21 days is from February 1 to February 21. And within
Mm-hmm.
that period, you spent $500, right?
Mm.
Then fast forward to February 30,
Mm.
your statement balance could be $1,000. So
Mm.
it means that if you're able to pay $500, which you used within
21
your
days.
21 days cycle,
Ah, okay.
you will not be charged interest on
Um,
that account. Right.
Now I get
So you
it.
still probably have the $500, which you still have, another 21 days to be able to pay on. Right.
Oh,
So one need to pay attention to that to ensure that you are avoiding unnecessary interest rates and you're
yeah.
also trying to improve your credit score.
Thank you so much. You've really trashed this thing. So I think I have one more question. This one just came to me right now. So I remember, so someone asked me a question. I posted a video and someone asked me about this. So let's say you're trying to assess financing for a car. You want to buy a car and it is finance, right? And then you also want to get something else. So now my question is that how does using your credit or accessing financing for say a car, how does it affect accessing financing for a house, for example? Everything has to do with the credit worthiness or your credit score or your credit history. So does one affect the other?
So one thing we need to know about credit and financial institutions advancing credit is your capacity.
Yes.
So your capacity is very key to credit.
Mm-hmm. Mm-hmm.
Now, if you have $100,000, 100,000 annual income, for example,
Yes.
you might be able to access up to, let's say, a $30,000 credit, for example,
Okay.
right?
Okay.
Now, if your income is about 300,000 per annum, your
Mm.
capacity is more than someone who's earning $100,000. So
Mm.
your credit, um, the amount of credit that you might be able to access would be much more than what $100,000 income will be able to access. So
Okay.
all of these, whether you want to get you want to do financing of a car, you want to get a mortgage, it's all about your capacity. So if your capacity is not able to combine both, it
Okay.
might be
I
an
get it.
issue.
So they will.
The
Yeah.
financial institution would look at what financial obligations you have before they advance any credit to you.
Thank you so much. I think I get it now. So it all depends on what you can afford, your capacity. They will check. Can this person handle both financing at the same time? If it is allowed, if the person can, then they approve. If the person cannot, they don't approve. Thank you so
Yes.
much. You have been very explicit in all of this. Please, guys, don't forget to like this video, okay? Share with friends, share with anyone you know that is battling with credit card issues or you think the person needs to know. Don't forget to subscribe, share with friends, And also, like I said, he's a financial consultant. So if you need if you need his services, I'm probably gonna get his contact maybe later and share with you guys. If you need any of the financial services that he offers, that his organization offers, you can get back to him or you can get back to me and then I'll reach out to him and then I'll send you his contact. I hope you guys understand the flow. You know the way we do it, right? Okay. So we're rounding up now. I think we've covered all of the questions I have that has to do with credit card because this one on its own is like it's a whole thing, as in it's something you really need to understand, especially in a place like this that, like I said, it's all credit driven, credit history, credit score, credit everything. It's a lot. All right, thank you so much. So I just want to get like any last words, anything, any like
Yeah.
golden nuggets, any golden tip from you being a financial or being like an accountant that you can offer to people, especially when it comes to credit card, like something they probably don't know, something they've not heard before that would be like that can be like a sort of advice to everyone. I think I'm not sure if this is only, but since we are focusing on Canada, let's do Canada. I don't know how it applies in other countries, but for Canada, what is the golden advice when it comes to making use of your credit card and staying safe? Being credit card safe.
Yeah, that's quite important. Thanks so much. The last word is, as you come into Canada, if you are new into Canada or you are still in Canada and you feel that you don't need a credit card, you need a credit card because the environment institution needs have to be able to assess your history, to have your credit score, to determine the kind of loan or credit that can be advanced to you.
Mm,
You also need to constantly monitor your credit card. Make sure you pay down on your balances as at when due, and to ensure that you are avoiding unnecessary accumulation and
mm,
interest payment.
mm, mm,
Yes, like she has mentioned, I'm a professional accountant. I have experience in investment, accounting, and I also work with a company that is into financial and accounting services, bookkeeping services. People prepare their financial statement. We help people in terms of any aspect of finances. We give financial accounting advice, business consulting, and we also help to prepare tax. So maybe at the end of this, we can, if you need any further question on credit card, on accounting, on bookkeeping, on even how to file your tax, yeah,
Yeah.
I will be available to help. My company is
Mm,
Synergy Management Incorporation, and we are
mm.
available to give any sort of advice that you need.
Thank you so much. Guys, like he has just said, they offer a whole lot of financial services here in Canada. This is a whole big team. And like he has also said, there is a whole lot of, even speaking of, one that just caught my attention now is investments. You can't be in a place like Canada and keep making money and not invest. So they offer all of the services, business advice, and the pricing. I don't know. When you talk with them, they're gonna. But trust me, this is something you want to know here. It's like a whole lot of financial services are available for you. Also, speaking of taxing, they help people, individuals, businesses, small business owners, all of that to have like a financial structure, tax. They do their tax filing. And speaking of tax, on the next video, I'm going to be speaking with someone about taxing in Canada. That's also another very big and huge topic, something you really need to know about. I know there's something about tax returns. There's a whole lot of thing about taxing in Canada. So watch out for that. If you have any questions about taxing in Canada, please put it in the comment section on this video. Okay, so that we can get to it. All right. Thank you so much, guys. Thank you so much, Mr. Samson. Please go and say thank you for him in the comment section for me. Okay. Thank you so much for taking out the time to do this for us. You guys, the only way you can say thank you is go and check out the services they offer. If you know you need any of those services, you're an entrepreneur here in Canada, you offer some, you know, services whatsoever that you think you will need financial help for, consultations, all of that. Just go and check them out. I'm going to put the link to their business, their contact details, what they offer, everything in the description box so that you can check them out. Okay. Thank you so much once again for joining us. We appreciate you for taking out time to do this. And we can't repay you enough, but we'll find a way to repay you in the comment section. Thank you so much. Thank you very much.
Thanks,
Thank you.
thanks so much.
All right. Thank you so much, guys, for watching this. Thank you so much for watching this. Okay. And like I said, upcoming is on tax. Watch out for that video, and we'll see you again on the next video. Okay. Bye.